They are back at it again. The Fed manipulating the message here, or actually Jay Powell manipulating the message and softening the blow. But there's something extremely important that he said, along with a potential market catalyst that is yet to be released. And that could really dictate what happens to the market for early 2022, how the market performs. As you know, information that is not known once it is released can cause the markets to shift violently in either direction, especially considering the current market landscape. So we will get into that, and I will tell you what I expect for the market upcoming, and we will go over what Jerome Powell stated today, how he manipulated the Fed message. It was really understated. It was really a masterful display in communication. So we'll go over that. I think it slipped under the radar, to be honest. If this is the first time on the channel, welcome to The Traveling Trader. You get anything out of this video, leave it a big fat thumbs up. My aim is to give you the most concise, up-to-date, non-BS market info. Let us get right into it. So I tweeted this yesterday. I said, Uncle Jerome speaks before the Senate tomorrow, confirmation for second term, because it wasn't a Fed meeting. They were actually confirming. It's like a dog and pony show that I don't know why it still exists in U.S. politics, but they were confirming him for a second term. I said, first time we hear from him since the meeting minutes were released. I bet we see a green relief day after he whispers sweet nothings to the senators and their portfolios. And then I said, Nancy will slip him a 20. I had to include Nancy in the storyline. I just had to. And I put this Photoshop picture of Nancy with the $20 bill. And what do you know? The NASDAQ up a healthy 1%, S&P up 0.2%, and the Dow Jones up insignificantly, but it is still up. Now, because the indexes and a lot of the mega cap stocks were at support, what I did was sold cash secured puts on Tesla. I sold cash secured puts on the NASDAQ on the triple Qs, sent those out in the trade alerts. We're up 35% on Tesla, up over 20% on that NASDAQ play as well. If you want access to all of our trades, link is in the description below. I also send out a lot of updates on Twitter, so follow me there. All right, so why did I expect to get some relief today as Jerome Powell was speaking? Well, because as I said, he's a master of messaging. So I knew that after the meeting minutes were released, right? And again, he likes to telegraph the Fed's positions through various activities, not just on the official, Fed meeting itself, on the official Fed meeting day itself, but he does so through the minutes, through other testimonies that have nothing to do with Fed policy. He's very good at allowing the market to digest that, seeing how the market and the economy responds, and then adjusting on the fly. So what he actually said, and it kind of slipped under the radar, but the market picked it up, and that's why the market started rallying. But what he actually said was they're not actually looking to actively sell assets off of the balance sheet. Now, again, I did a whole video on this. Check it out here. But basically, we knew about the tapering. We knew about the interest rate hikes. What came out of the Fed meeting minutes that really rocked the markets after the Santa rally was that the Fed was looking at selling assets off of the balance sheet. As you guys know from that video that I did, the Fed holds almost $9 trillion in assets. This is in the form of treasuries that they purchase from banks, as well as mortgage-backed securities and other assets. And they're providing liquidity to the banks, which increases the money supply, which is why we have an insane amount of inflation. So the market was expecting the Fed to leave those assets untouched, possibly revisit selling some of those assets next year after the Fed rate hikes are done, after tapering is done. However, it looked like they were more aggressive, or looking to be more aggressive. But if you look at what he said here, this is just a little snippet of what he said about the balance sheet. This was a very masterful messaging tactic where he basically talked about a balance sheet runoff and not actively selling assets on the balance sheet, meaning that those securities, when they come to maturity or when they expire, he's just going to let them drop off of the balance sheet. But he did not mention that they were actively going to be selling assets or not. Let's take a listen.
What have you really learned and you would share with your fellow Board of Governors to get a grasp as much as you can on inflation? Because a lot of us have been on the committee a while, and we remembered what Dr. Volcker did with the Fed under his leadership, and it was draconian, but it worked. I hope we won't have to do that, but you've got to do whatever you have to do. Do you agree?
We have to achieve price stability, and I believe we will, and I'm confident we will. And again, it's not just a question of restraining demand, although that will be. Right now, we're stimulating demand with very highly accommodative policy. As we move through this year, we will, in all likelihood, we don't know the future, but if things develop as expected, we'll be normalizing policy, meaning we're going to end our asset purchases in March, meaning we'll be raising rates over the course of the year. At some point, perhaps later this year, we will start to allow the balance sheet to run off. And that's just the road to normalizing policy. That's what we're going to be doing.
So you see how crafty his response there. It reminds me of like when your spouse asks you a direct question, but you answer in very long sentences, trying to avoid answering very directly. So he said, we don't know the future. We don't know what the future will hold. We are potentially looking at letting the balance sheet run off. So he's not saying we're going to actually take these assets and sell them back to the banks in order to get some of that cash out of the system. He just said that they will let them run off, meaning when they come to maturity or when they expire, they're just going to drop off and they're not going to be purchasing any further assets. And the markets were clearly looking for any sort of, as I called them in that tweet, any sort of sweet nothings in order to continue the risk on environment. Now, will the market continue here? There's a catalyst, as I mentioned at the outset of the video, called the CPI data, which is basically the main metric used to gauge inflation. What the Nasdaq is doing currently is what it always does when it suffers a correction to the 100-day moving average. Look at this. I mean, going all the way back to March 2020, every time the Nasdaq saw a correction to the 100-day moving average, it spends 2 or 3 days below it, just below it, and then pops back up. You could see this back here in October, again in March 2021, May 21, October 21, and then now. So will it break trend? Well, it all depends on what the CPI data actually uncovers. Now, here's the good news, if you can call it that, is that the market is expecting high inflation. We already know that, meaning that is priced in, right? So if the numbers come in line, if the CPI data is released, and by the way, it's released on Wednesday, January 12th, this video is recorded January 11th, so just so you guys know that. But if the CPI data released is in line with expectations, you can expect the market to actually continue or at least hover sideways but not tank, right? Like this could be the extent of the correction for early 2022. Obviously, we have the Fed meeting at the end of January, so that could also, dictate what happens in the market. But again, if Jerome Powell today, if what he did was actually telegraphed the message that they were going to issue on January 25th and 26th, then that is already priced in as well, as long as he doesn't deviate drastically from that. So if the inflation data comes in line with expectations, then you can expect the market to at least trade within this range here that we've seen and not continue to crash or not crash further. Or it can even make new highs. That is just how crazy the market is. There really isn't anywhere else to put your money. However, if inflation data comes in lower than expected, then for sure you can expect the market to rally and make new highs. The only way that I think we see a major crash or, a move down to the 200-day moving average or beyond on the indices, on the major indices, is if inflation data is so much higher than expected and it just seems too violent for the Fed to control in the short term. Then you better believe that they are going to go and grab Jay Powell out of his bed in his pajamas and take him to wherever the Fed headquarters are and make him raise rates on the spot while he's still wearing his pajamas, right? That's if inflation comes in red hot, much higher than expected. So, we will see what happens. But as I said, the Fed is a master at messaging. They really are. And somebody asked me in the Discord today if Jerome Powell is the best Fed chair that I've seen in my lifetime, at least in my trading career, out of the 4 that I've seen, which is Greenspan, Bernanke, Yellen, and Jerome. I mean, he is by far the smoothest operator. So in terms of how we're trading it, keep an eye out on the trades. We send out the options day trade watch list in the Discord as well, talking about the key levels every single day on the indices, as well as some of the mega cap stocks that we're trading, some of the very high volume stocks and options that we're trading. So keep an eye out on this as well. Remember, it does not matter the direction of the market. We will always have a potential setup ready to anticipate what the market does. If you got anything out of this, leave it a thumbs up. Leave it in the comment section below. Let me know what you think of Jerome and his ability to spit bars. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.